Well, Lupin is what we want to focus on. Numbers were good, 20% EBITDA beat. And my colleague Ekta spoke with the management of the company and began by asking them about their India business growth and the outlook there. Listen in.
The India business includes what we call India region formulations plus other formulation sales that we do in India as well. So that was the other part was also a very strong contributor to the growth. Minus that, the growth was little over 10%. Again, very good growth. The Indian market is back to reasonable growth. Our goal is to grow 20 to 30% ahead of that market, and we're on track with that growth. We see that across our key therapy areas. So we see the growth in cardiovascular, we see the growth in respiratory as well. Diabetes has been slow for us with the in-license portfolio, but net of the in-license portfolio, the growth was actually 13% internally. So good growth in India. We've added a lot more people. We're close to 10,000 people now. Yes, we're all in. We're all in for India.
But is this growth sustainable in the coming quarters? What is an average?
So I think double-digit growth in India is an expectation. I think the market is expected to grow at 7-8%. On the back of that, if you do the math with 20 to 30% more, we should be at double digits. So that is certainly our aspiration for India.
Okay, all right. Vinita, the US was the other key driver this time, $227 million. How much of this quarter was because of Mybetriq generic, and how much of it was due to other key drugs such as Spiriva generic, albuterol, Suprep, Duravanir?
Yes, so it was a very solid performance across both inline business as well as new product launches. Pretty stable inline business, some decline in products like Suprep that saw additional competition, but more than offset by the new product launches. With the respiratory products, both tiotropium as well as albuterol were pretty strong contributors to the quarter as well. We continue to sustain our 30% share of tiotropium and continue also to deliver pretty strong share on albuterol. So respiratory products did extremely well. The new product launches, both mirabegron as well as doxycycline Oracea that we launched in April, were strong contributors to the quarter. So, really, both the inline products, respiratory products, as well as mirabegron and doxycycline contributed to the quarter.
Okay, so what are you guiding for when it comes to the US? You've mentioned in the past that you all will sustain $200 million per quarter. You've done better than that. You've almost done 230. So should we work with a figure which is higher than $200 million? Has the range moved up? What is the sustainable run rate for the next couple of quarters?
So around the current levels, between 220 to $230 million a quarter, depending on, changes in the marketplace with key products. Just given our inline products as well as the new product launches, the ramp up of new products that we've launched, like mirabegron, as well as additional new products that we have the potential to launch now. Last week we received approval for Predfort, where it was CGT approval. So we are really getting ready to launch that product as soon as possible to, benefit from the 180-day exclusivity. That will be hopefully a material contributor. And then as we look through the year, there are other product launches, including material injectables like glucagon, more at the end of the year. But, given both the stable base business plus now the new product launch engine also delivering at a high gear, we expect to really sustain around the current levels, I would say, between 220 to 230 million.
Okay. All right. Nilesh, on guidance, the last time we spoke with regards to FY25 guidance, you said you expect around a 10% growth in FY25, margins at around 20%. And first, you need to firmly entrench that 20% margin. Are you sticking to that guidance considering the quarter has done so well?
I will hand over to Ramesh to answer this as well. But from my perspective, I think first of all, you're seeing us getting back to growth. So you see that double-digit kind of growth. That's certainly something that we expect to continue, led by the US and then, all other geographies, including India. On the profitability front, we're obviously, I think we're pretty well set on the margin that we're getting to now. There'll be a little bit of lumpiness, things will go up and down, but I think we talked about firmly entrenching at the 20% level and then improving from there. So obviously we're on track for that. But I think Ramesh can add here.
Okay, Ramesh, go ahead.
Thank you, Nilesh. You recognize it's actually a function of three things: the top line, the middle lines in terms of cost, and of course the R&D expenses, which actually plays a big role. The top line buoyancy will certainly continue with an array of products that you'll be launching in various parts and the like. And of course, there's been a tremendous focus on, in fact, the cost lines as well. Productivity gains, in the alternate vendor development strategies, focus on margins. All of this has certainly paid off very well. On the R&D front, you recognize that this particular quarter has been a little lower than the past. If you look at, for example, Q4 FY24, we actually looked at 430 odd crores, whilst this particular quarter has been 350 crores. We do believe that it'll actually step up in the quarters to come. So from that perspective, there would be, of course, a slight reduction. So if you were to look at EBITDA margins without considering R&D expenditure, it would certainly be increasing. But overall, I would think that be guided for about 20.5% for this year overall. And we believe that we are in line to do at least 21% for the full year.
Okay, so you're expecting to do 21% for the full year in terms of margins. 22 to 23% was your longer term target. When do you get to that, Ramesh?
It's all of those things that we have planned for are really on course. So essentially, the kind of products that you'd be launching in various parts and the constant focus on costs. And of course, the R&D expenditure. From our perspective, the core is indeed 22, 23. But you would also imagine you can actually if you look at, in fact, the adjacencies. So if you were to actually knock the impact of adjacencies, we're already at 23%. And we, over the next couple of years, are looking at various options for looking at the spin-offs and bringing in private equity monies. And they would also be evolving in terms of business itself. So 23 and beyond is certainly a target that you'd achieve in the medium term.
When you say spin-offs and private equity money, what are you referring to? Is it for the business?
The adjacencies in terms of the digital business, the diagnostics business, the OTCs and all of that as well, which at this stage are not making monies.
So anything we can expect in the near term, and for which business in particular?
No, we have also a timeline when we will be looking at all of this. So we would like it to gain in critical mass before we take steps in that direction.
All right, that is Lupin sounding confident about retaining that growth trajectory for the rest of this year, projecting margins of about 21% for FY25. Stock's been holding up quite well after what has been a good quarter. Take a break, come back on the other side and